let's quickly move on to the top 5 things to watch next week. And number 5 is talking bonds in the absence of the macro tourist, because this is the only safe environment I have from which I can express my bullish bond views without Kevin shitting all over me and getting all triggered. And so, so we can talk about the conversation we had there. And to me, uh, I am not I don't believe 10, 20 years from now we're still going to have negative interest rates and zero interest rate. There's going to be a period where governments will have no choice but to turn to creating money to deal with the situation, and it's going to lead to inflation, and it's going to break the bond market at some point. I just honestly think that if anyone who thinks it's happening this year or even next year, I don't even think it's a 2020 story. I believe the bond market is still, the bull market is intact. The bull market will still continue next year. And we're going to see eventually when the business cycle turns and a recession comes, and whether it's a 2020 or 21 story, a recession will come, and the Fed will cut to zero, and the whole yield curve will flatten, and interest rates will go down. I don't know whether we'll see, when I mean say the whole curve is going to flatten, I mean the long bonds will still perform. And we might still see steepening in that environment, depending on if the Fed is cutting faster. But there will be a day of reckoning. It's just not in 2020. I'm making the call right now. And that's it. Kev, you can come online next week and shit on me for this. I'll let you have your rebuttal, but that's my opinion. Any comment?
Well, so we're talking, what is inflation? Well, we all learned in high school. Too much money chasing too few goods, right? Is there wage inflation? Yes, thank God, at the lower end of the pay spectrum, finally coming in the United States, hopefully coming up here. But the workforce, one of the things we keep, guys are in their 60s, still working. Guys 65, 70, still working, but they don't need the raise. They're not pushing. They're still out there. Wage inflation, it's on the lower end, not on the higher end.
No, there's no sign of wage inflation. And it's amazing is that we have
Trump
such
can do a lot of things, but he can't make America young again.
That's true. He can't make
and this is not to get political, but this is the most anti-immigration president in modern memory. Yeah. So the young labor pool has got to be domestically induced. I don't know who's having 8 kids, to replenish that workforce. I'm sure they're out there, but I don't know.
But even forget that. How about just the Gen Zers coming in to replenish the workforce? Like, anyway, the point being is that yes, inflation will at some point come. I just don't think it's 2020. Anyway,
you're right. I'm with you.
So let's move on. Number 4. I wanted to talk the dollar index. Enough about bonds and interest rates. So let's get to the dollar index. And what is interesting is I want to just talk about a technical level. So here I have the dollar index, and we had a pretty oversold condition on the dollar, and then we went through this little rally the other week that saw the dollar index printing up towards like 98.5. And that saw the euro testing 110 on the downside, and we saw all sorts of the cross currencies making that reaction. But from a technical perspective, this was nothing more than a 50% retracement of the prior decline. And so what I felt was important for our listeners to watch for going into next week is, was this just a retracement, and will the dollar bear resume? Now, I am a bigger picture still a bond bull. Sorry, not bond bull, a dollar bull. I actually am not bearish the dollar, but this is technically a level where a resumption in selling could occur. I mean, we could see the euro off this level, the euro trade back to 112, the Dixie trade back to 97, and just looking at the CAD, I have here. This is the Canadian dollar versus the U.S. dollar versus what a lot of forex traders look at is the inverse of the USD CAD, but to me, the Canadian dollar has been dogging it as well, right? Like, do you have any opinions on the currency? No?
I just real quick, like it seems like with the geopolitical U.S. China thing, the U.S. by all accounts is still the strongest economy with the strongest domestic numbers, with so many pension managers around the world who what if you're a German pension manager, you gonna go buy a German 10-year bond in order to make your obligations, or are you gonna take 1.8 on a 10-year US all day long?
Yeah.
It's the only game in town. And if it's the only game in town, you're gonna go see that game. Until another game comes around, unless something structurally changes, unless the emerging markets trade comes back, it came back a little bit this week, but there's your retracement. If there's the only game in town, everyone's going to crowd out to go see that game, and tickets are going to be expensive. So yeah, I'm with you.
Yeah.
U.S. dollar.
So I want to move on to number three. And so number three, I wanted to talk about the make it or break it moment on crude oil. And they're only technicians really are seeing the same level. But when I pull up here a chart on crude oil, what we had was the attack in Saudi Arabia that occurred right up along this $60 area where that big gap came, and
Yep.
oil completely closed the gap and dumped all the way down to almost $50, $51 area on the downside. And since that low, oil's been crawling higher day after day. And it was an interesting observation that was made by Eric that it seems like the oil's weak in the European session, and suddenly in the North American session, they trade oil up higher, and it always is rallying throughout the North American session, and it like clockwork, it happened today. I mean, started the day edging down toward 56, and then suddenly we're trading almost at $58 on the close on
That's a
Friday.
nice move. Yeah,
And
sure.
now,
Intraday, sure.
right above this $58 area is the level that's important to me. I look at the Fibonacci's, and so there's a 61.8 retracement up there. And for me, in order for this rally in oil to be legit, I want to see oil clear 60 because
And
at
stay
that
there
and I
and hold.
and hold. You basically want to see the Bulls grab the reins, like they have possession of the ball and they're running with it, and they're just blowing through all the lines of defense and are running with it. And I think that this is a make it or break it moment, because if oil gets hammered off this level and we're back down to 55 or 54, then this will be classified as nothing but a Fibonacci retracement of a major downtrend and a resumption. And at the same time, if the Bulls grab the ball here and punch the defensive line and punch it to 60 and hold it, then we may actually have oil behaving the most bullish it's been since the start of 2019. And I'm not making the call of a direct bias, but this is a real important thing to watch next week.
Sure.
And I really am curious whether or not the Bulls will prevail in this scenario. Do you have a bias?
Do you want to talk about Chesapeake for a second?
Oh my God, yeah, sure. Let's talk about, but that's natural gas, right? But they're I was looking at it. Their Chesapeake's bonds are like 57 cents on the dollar. They're like freaking pricing this thing for bankruptcy.
So I just want to sort of relay the Chesapeake kind of thing is I think they had their earnings out, and
Yeah.
they put a note where ongoing business could be a growing concern, and I just want to sort of relay, because Chesapeake is really the poster child of the United States energy strategy to become self-sufficient by way of fracking. And in energy, in terms of oil and natural gas, what the United States wanted to do, what they have achieved to an amazing extent, is to flood the world with supply. Now, this is a great thing. This is a great thing, not for oil bulls, but geopolitically for the United States to basically be the masters of their own destiny. And they do have some sort of an agreement, if we want to talk about it or not, with OPEC, whereby which this administration would rather see oil under 60 Okay, it works for the economic model. It works for the market. Now, for their friends in the energy patch, the guys in Texas, the guys in Oklahoma that voted for them, the strategy is, okay, guys, I know that oil's not at 85. I know that sucks. So guess what we're gonna do? We're gonna slash environmental protection so that you're pumping at 20, 25. You can still make money at 50, 55. Everybody wins.
Yeah.
It's a strategy. But if you start to get a Chesapeake type of contagion thing, I had a CEO come in to see me, runs a small cap energy fund in the Permian Basin. His whole pitch on why I should be investing in shares in his company is that he understands how to source wells at half the price of Chesapeake. So that's his only game plan. His game plan is I can negotiate prices for buying wells and buying land at half the price that Chesapeake did. So therefore, I have an advantage.
Yeah.
In no way, shape, or form did he have a bullish case on energy. No way, shape, or form. This is the CEO of a company who runs it. He's down. Either I don't know if he's in
But
Dallas or Houston.
this industry has been decimated to the thing. It's like gold miners in 2014,
So
15. It's the ugly stage of
it's
some of the.
look, they're not alone.
Yeah.
It's ugly in the base metals market.
Oh yeah.
It's ugly in anyone who has anything to do with global growth.
Yeah.
And that to me seems to be the story. So yes, geopolitical things come in. If, let's say, Warren wins and outlaws fracking because she doesn't want your tap water to be glowing, you could see oil going to 80, 85 bucks. The US really, it's like a tipping point of the market in this deal with OPEC, this Saudi kind of thing that they've got going on. Saudi
Yeah.
Aramco has filed. Let's see what happens.
Absolutely. So, number two, I wanted to talk Amazon here, and what was interesting about Amazon, I want to turn to a tweet by Tavi Costa, who we've had on the Market Huddle from Crestcat Capital, and there's a whole conversation on Twitter talking about the divergence of Amazon from the S&P 500. And he's pointing out here in the tweet that there's over a 15% divergence in July. And he goes on to ask the question, if this number one market darling goes, the business cycle is done. And that's a pretty bold call to say that the business cycle is done. But the what interesting thing there is that it's amazing that you have Apple running like it stole something. And you have Microsoft edging higher, and you've got the entire technology ETFs just running, and Amazon. Obviously, it's predominantly in the consumer discretionary basket more than it is on the tech side anymore. But it's just not being bid. Like it's just like in even in look, the S&P printed all-time new highs, and Amazon is down on the day. There is no money flow going into the stock, and it's interesting that Tavi's talking about this, and there's a lot of people buzzing about this in the space. But I think it's a thing to watch. I mean, if Amazon breaks 1700 on the downside, and we're breaking multi-month lows, what does that tell you about the markets? Do you think we're overreading into this too much? What's your call here?
Yeah, my call is that. Do you remember? Do you remember the first time you saw The Empire Strikes Back?
No, I don't. Okay, I do
Okay.
remember. Actually, I do remember. That's
Well,
actually an epic movie when I was a
this
kid.
week was Walmart Strikes Back. Everyone put
Oh,
Walmart up
oh
for
yeah,
dead.
it was a great movie.
Walmart can't compete. The whole narrative of
I
2018
gave it
is like
back, buddy.
Amazon's a killer. Amazon's gonna kill you. Amazon is
But is
gonna
that all about?
lay.
Is it about the stock price?
Amazon. No, no, no. Just I'm talking about the model because
Okay.
everyone, like, if you watch CNBC, everyone's obsessed with the model. Like all these smart guys talking about the model. and that Amazon's got the model, and everyone loves Amazon Prime, and you can't do without. Who wants to go to a mall anymore? What if what you want isn't there? Amazon's got everything. Blah 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 blah, and leaving every other retailer out for dead, giving them a discount. Well, Walmart has got they've got a deep bench. They can hire some pretty smart people.
Yeah.
They've been around for a long time. Walmart came through. I live in downtown Toronto. There's 2 Walmart distribution centers. 5-minute walk from my place.
So
I could go buy wine at Walmart.
all right, but
Touch
listen.
a screen.
All right,
don't
this
have
was
to go to
not
the LCBO.
whether
Anyways,
Walmart's going higher. Amazon, is it a game changer for the business
No.
cycle? No. So Tavi's
it's
wrong.
just like everyone said. What Apple wasn't Apple done when it hit 160?
Yeah, it was done.
Okay, well, okay, well, it's not done anymore.
It's not done anymore.
So,
but anyway,
yeah, like,
I think it's a pretty big divergence, and I think it matters. But let's watch.
if you're
and
long
see.
Amazon,
It
does,
is
yeah.
it is definitely a thing to watch next week. Whether Amazon can hold above 1,700. My intuition is it doesn't. I think because I think the whole market is in actually it works into number one. So let's quickly go to number one. And number one is the S&P 500 in the post-expiry market correction. And we at Macro Voices we had a interview with Charlie McElligott, who does all of the gamma and delta quant analysis of the markets. And I was reading his note this morning. And of the like $16 billion of gamma that's open on the options market in the strikes between 3,080 to 3,120, 50% of it rolls off on this November expiration because obviously the gamma is the biggest on the front month options. And the point that he gets at is that volatility will be back next week. It doesn't. He's not making the call that that's higher or lower, but rather that what was pinning the S&P 500.
Volatility is usually lower.
Volatility because of the dealer gamma is lower into the expiration, and then the volatility comes back in the post expiration. And one thing I was pointing out on some charts was the fact that the S&P has in the past had market corrections that have occurred in the post expiration period. I think only in January and October did we have a rally in the back half of the month. And with the S&P 500, let me just pull up a chart. With the S&P 500 having rallied the way it has, it is highly vulnerable for a market give back. And Kevin basically tweeted me this morning. He says this rally today is a prairie dog, and I'm with him. By the way, I don't know if you're familiar with the prairie dog term. Are you? No, it's a market huddle
prairie
special.
dog it is, but I don't know what a prairie dog.
Prairie dog
market analysis
as a market huddler. Now that you're a market huddler, the prairie dog is where the market pops above a key overhead resistance level, fakes everyone out like a prairie dog popping its head above the ground, and then pops back down below and reverses the other way. And it's a fake out move. And Kev's calling this as a fake out move, and I'm with him. I actually think
I'm not with him.
I think now. I want to emphasize that I've shared this with my members. I'm not in the camp that this is a major top and we're about to have a bear market crash from this level, but it is very typical after a move of this magnitude to have and especially after a big gamma roll off like that, to have a 3% pullback. And so for us to wipe 100 S&P points and a backfill back towards 3,000 where all the previous highs were, I think is actually an incredibly natural move. From that, we could have a seasonal rally, just like Jeff was talking about, from a seasonality and going into the November the Thanksgiving season, and we could turn around and see a meaningful rally that goes into December, and maybe we even print higher highs. But my money is on the fact that the market is likely to correct here. But as all of our listeners know, that when me and Kevin agree on something, you probably should do the opposite. And so with us both feeling like a correction's underway, maybe you should go long.
It feels good. feels good.
It
Join the
does.
party.
It's
Join the
quite the
party.
party.
Everyone's doing it.
Anyway,
Everybody's doing it.
so that is the our top 5 things to watch. I think watching whether the S&P does ensue a correction. I personally think about 100 S&P point pullback would be would be very reasonable to back
within
like the next week, like the next week or two. Definitely going in that. That's like a couple days of selling. That's not a big deal. But then afterwards, I'm not opposed to the market still rallying into year end. I'm not trying to make this like a major market top event. But it's just the market is overextended to the upside. It would be natural for it to happen. Anyway,
Right.
that's the top 5 things. So, will the market put in a short-term top? Will Amazon sell to break? Will crude oil, the dollar, and of course, we have made our little opinions known. Kevin, you'll have your opportunity to give us an update on bonds next week when I give you a chance to have a rebuttal on today's episode.
I defended you the best I could, Kevin. All right? I did
All
my
right.
best.